Thanks for taking the time to take a look at our ventures business plan. And just 16 slides will follow, and I hope you'll find them interesting. Now, imagine this. You're in a country with a California-sized market and a national government that has legalized growing and sale of medical marijuana throughout the country. And you can legally sell medical marijuana anywhere within this country. And you can accept credit card purchases and make deposits into a nationally insured bank account. And the government actually encourages you to use the secure national mail system for all your deliveries. No, I'm not smoking anything. I'm talking about Canada, your huge northern neighbor of more than 35 million people, 10 to 20% of whom are currently smoking weed. This is a market of 3.5 million people currently consuming marijuana. This is where we have a Health Canada accepted application to become a licensed producer of medical marijuana. And we plan to be growing before the end of next year. Now, as you may know, in the USA, it's a much different picture. Investors in the USA must worry. A federal bear is sleeping in the corner of all medical marijuana and all marijuana operations that can awaken at any time and kill all medical marijuana operations in sight. Here in Canada, however, these types of bears don't bother us. Also in Alberta, where we're located, we pay only a 5% tax on sales, and there's even a national initiative afoot to eliminate all taxes on medical marijuana sales. I think you'll have to agree, we've got a great political environment here for medical marijuana in Canada. Now, the 5 objectives that we have for this venture is first to develop and operate and grow an initial Phase 1 12,000 square foot facility licensed by Health Canada. And we target being licensed and fully operational by the end of next year. And we'll expand to 84,000 square feet within 4 years using internally generated cash and a bit of commercial debt. And we expect to be able to provide our investors an approximate 280% return just from operations. In addition to that, we look to refinance the mature facility in 5 years, returning to investors an additional 400% return. And we look to sell this venture entirely in 7 years' time for an additional 400% investor return. So the total return to the investors could well exceed 1,000%. Now we're determining this value at a 10% cap rate, and we recognize we could probably get a better cap rate than that, and we could possibly sell by an IPO depending upon the market conditions at that time. Now, the preferred positions we're giving our investors is they'll receive 50% of the first year's distributable cash flow, and from then on they'll earn a 10% cumulative preferred yield on their invested equity from year 2 onwards, plus 50% of any excess cash flow from the operations. And they'll receive a preferred return of all of their invested equity from any refinancing and 25% of any excess cash from that refinancing. And in addition to that, they'll get a continuing distribution of 25% of all excess cash flow after they received all of their capital back. And this would be from operations and from the eventual sale of the venture. Our development plan is to develop the 138-acre property in 4 phases, the first being a 1,200 square foot facility and another 1,200 square foot facility for phase 2, as you see in the graphic. Then we'll have a 12,000 square foot phase 3 and a 48,000 square foot phase 4 for a total of 84,000 square feet. And you'll see we've got plenty of land in which to grow our operations and to quickly respond to the promised adult use legalization opportunities next year. Now, core team members, myself, Larry Bortles, with the 50 years real estate investment, development, and management experience, And my partner, Riley McGee, who's a Canadian veteran from an Afghan tour, and he's got several buddies with PTSD issues and has found that medical marijuana has helped them a lot. In addition, he's got 9 years of real estate investment development and sales experience. Since we're going to be developing a medical grade facility, we're really looking for and have found Mary Roeder, who's a 20-year pharmaceutical quality professional, and she's going to be overseeing our operations to make sure we grow and process in the finest and toughest standards. And we've also got Justin Trudeau, the Canadian Prime Minister, as a rainmaker for the Canadian cannabis industry. Now, from a supply and demand standpoint, we're projecting that there's going to be a huge increase in the number of licensed producers. Right now, or at the beginning of this year, there were 30. We're projecting this is going to increase it by 200 additional licensed producers over the next 2 years' time, 520% increase. And we also expect a similar increase in the amount of medical marijuana produced. And we expect even a bigger demand increase. Right now, the demand is increasing at 30% per quarter, and we expect that demand should outstrip any supply by our opening date at any one of these growth rates. Now, the clients that we need to meet our projections, you'll see that we really need very few civilian medical marijuana clients to be successful. They, on average, consume 1.5 grams per day, and on that basis, we'd need only 569 clients for our phase 1 to be profitable and throwing off what we expect to be something in excess of $1 million a year. For our phase 2 to be fully profitable, it's under 1,500 people, right on up through our phase 4. But what's rather interesting is we're going to focus primarily on the veteran market. And those veterans with their PTSD issues consume about 5 grams a day on average. And because of Riley McGee's contact with the veterans and another group that he's working with that deals specifically with veterans, we would need only 171 of these types of clients for us to meet our profit objectives in phase 1. Under 500 of these people for our phase 2, right on up to eventually needing only 1,638 of these by the time we're at our 84,000 square foot phase 4 configuration. Our client acquisition program is we'll first have an e-commerce site, and we'll use that until we get operational. We use that to direct potential clients to currently active aggregators, aggregators. And we're going to favor the MFT group, which Riley McGee is already working with, which has over 4,000 members. And they do, as I mentioned, specialize in veteran PTSD needs. And we've got a current contract with that MFT group that's going to guarantee their purchase of whatever we wish to sell them at Canadian $5.25 per gram, which is approximately $4.20 US per gram. And you'll see this actually exceeds our assumption of sale price for our projections. And we'll also engage in a professional online promotion of our e-com website once we're open for business to attract retail clients, which should pay more than that $5.25 that I mentioned the MFT group contract provides. Now, key assumptions that we have here, we believe are quite conservative, but you'll have to make your own determination on that. You'll see, again, our target is $4.06 a gram US, and the MFT group actually guarantees us more than that. The range right now is between $4 and $12 per gram, so we're at the low end of that scale, and the median looks to be about $6.40 US per gram. And you'll see too, our break-even is is $1.56 a gram, which gives us some comfort. And from a production per grow light standard, which is an industry standard, we're projecting only 1 pound of premium bud per grow light. When the standards for the type of facility we're going to be building, which is very high end, we could very well get 2 pounds per grow light. So the industry, we figure, is for the type of facility we're building, averages probably 1.5 pounds per grow light. So we could very well increase our production rate at this level by 50% over what we're projecting. Overall, the plant productivity is a bit lower, we're projecting, than what we actually expect to be able to do. And our operating costs per pound is well over the industry cost per pound. So we believe on all counts we're being conservative, and we've got a good chance of beating our projections. From a financial performance standpoint, you'll see that we expect 660% return on the invested capital by the 5th year, and that's after we accomplish that refinancing. And overall, when we sell the property, something in excess of 1,000% return by the 7th year. Now, valuation for the property as we go through the phases is shown here. We'll start out, once we complete phase 1, we expect it should be valued about $11 million, and right on up to eventually, when we're ready to sell, we expect it to have about $190 million value, which we think could be considerably more if we actually achieve a higher price for our product. Now, our capital requirements is a $4.6 million that we're looking to raise. That's for an all-equity funding of phase 1, and then we'll commence our operations. The schedule that you'll see here shows a US $200 per square foot budget to equip our grow facility with the very best tech available, including CO2 processing. We're advised this is way higher than what it needs to be, but again, we'd like to be conservative with regard to these allowances. Now, we're offering $25,000 equity units with a minimum of 4 units, and once we complete this offering, there'll be no further equity required. Now, my partner and I look forward to answering any questions you may have, and you'll see here our contact information. Thanks for taking the time.